Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Hey everybody, hope you're having a good day. It is Thursday and we are 20 minutes until the UTC close for the day. And we are definitely seeing a very specific change. So back when we left our bottom, 15,000, 16,000 area, we exited this red zone. We had a few days where we were above our 20, our 9 and 20 crossed. We had a nice move up that just never stopped. But we hit this section here where we were getting toppy. It was very kind of interesting. So we had a nice move up. We consolidated sideways for a bit. We had one more push, and then we kind of struggled. And then we started dipping back. And what happened is we eventually lost our 20. Our 9 crossed below our 20. And we had a bit of a drop here. I'm seeing the exact same fractal happening right here. Big move up. We have a pretty good move, and then we consolidated. This definitely looks a little different, but the feel is much closer. We're back above our 50, trading above our 20. The 9 and 20 crossed, relatively soon after we got going here. And then we have this sideways move, and now move up, kind of struggled here, and now we're moving down. Can't tell you, closing the first time below the 20 in a long time is pretty significant. This is a pretty decent change in the structure, the look and feel of this. This line is a pretty hard line right here. So this line is pretty much there's this pretty strong case to be made that if we lose this line here, we are going to be in for some downside. And the downside won't be short because we have had a monstrous move. This move down was phenomenal. This was definitely the foothold we needed, which means we're probably not going back to 20. That is not probably in the cards. I wouldn't think, just because of this incredible pullback and then the response from it. But we will likely pull back pretty good. And I'm eyeing the 200-week moving average as a target. Normally you would think that the 50 would be support. The 50 is going to be stronger support when we're in an actual bull market. This is the year of the chop. We're chopping sideways. This is where we're finding our ground. We're getting off the bottom. There's going to be some good volatility here. I really don't see us losing the 200 week. But that's a decent move from where we are. You know what I mean? So it's about 8 or 9%. We've done that many times in a single day. So we are probably pulling back. I don't think this 50 is going to make a difference. We didn't really care about it here. We didn't really care about it here. And for the structure of this chart, where we have rising support and level resistance, and we broke out, if we drop below both of those lines, there is going to be kind of a vacuum here. And we're going to pull down, and it's going to be the weekly that gives us more structure than anything. So I could see us over the next few weeks pulling back to this area here. Worst case, it would be confirmation of the neckline right here. This is 24, low 24s. So, hate to be the bearer of bad news, but this chart is shifting. things are changing. We definitely did not hold up here. Does that mean we're going to go straight down? Not necessarily. I think in the very short term, we're going to get one more attempt. And the reason why is because sometimes, especially before whales really move things, they like to do a nice fake out. This was a pretty sweet fake out, I have to say. This move here, to move up to the top here, it was pretty sweet fake out. I mean, it was, we have definitely moved on from here. So we're pulling back. Yeah, the other thing that I've seen this fractal around, but I pulled in the matcher and used yesterday's close. And this is the closest one. So the variance is 20%. So it's still not perfect, but it definitely tells the story. So August of 2020, we are looking like we're kind of in the middle of this formation. And it's sort of, it's kind of an interesting thing. If we go to this, I'm actually I'll pull it up on here in its own chart. Hang on, I've got to turn off my interval. Okay. So this is 2020. So this is kind of an interesting fractal. So I've seen this a couple of different ways. If we make this really small, there is kind of a case where the bottom of this is potentially the bottom of this, and so this is more time, but that we moved up pretty good, consolidated sideways, did this whole thing, and that this was sort of our bump, our consolidation, and our run down, and that potentially this won't be very long lasting. So this is a much shorter time frame. This is also extremely optimistic. I don't think we're just going to do this. We're not exactly in this phase of the market. We're more in this kind of recovery sort of phase, and there's a lot of question marks. We're not matching this at all, but I think from an actual day-to-day standpoint, the last little bit where we've kind of pulled back a bit and we've had a pretty significant move up and consolidated, this entire move is pretty reminiscent. So this would technically move starting around here and potentially end down here. So the structure of this chart here is that, well, let me bring it back up here. Let me go get this other view. So this is how I would analyze this other fractal. If we were doing something like this, there is a significant chain. There's a difference between these two charts. Number one, where would I draw resistance? There might be a case that this is sort of that this line is sort of a little bit out of line. You know, there's no other resistance up here. You kind of want a resistance that is at least has a chance to be resistance. You don't need a wild spike being your only number. So there are approximately 3 touches on this line here, and I'm even a little bit. So if I zoom in on this, I'm a little bit lower than the candle body, so it's kind of a wreck. This is not the prettiest line, but it's probably the best estimation of a horizontal resistance that we experienced during this time period. And when we came up, proof that the line exists is that when we did break it, it broke hard. And so this is usually a pretty obvious breakout. We definitely got off the mat. But look how we behaved around it. When we had our move up and our sideways consolidation and our pullback, all we did was confirm that this resistance became support, and then we took off. That's not what we're doing. That's not at all what we're doing. Right now, the most conservative that I could even possibly draw this line, the most conservative that I could even think of would be this doji candle here. I can't go below this. I mean, let's pretend, so this candle closes in 10 minutes. Let's say it closed right here. We're in the middle of all kinds of candle bodies. So we are deep into the consolidation here. There is a slip happening. We are not bouncing off. We're not getting a handoff from resistance to support. And yeah, we're definitely pulling back in a way that we haven't seen for a while. Here's another view that kind of backs up what I'm saying. Look at the RSI. The RSI, when we got off the ground, midpoint is 50. So we're always trying to be around 50. And if we go sideways for a very long time, we'll eventually get to 50. And so this definitely, you need to be moving in order to maintain any number above 50, or you need to be moving down continually to stay below 50. If you're just going sideways, you'll eventually get to 50. Well, we have stayed above this line even while we were going sideways because there was so much motion here. And when we got to about 14 days or whatever, and we really started losing steam, there was still enough movement upwards, and you can see it from the support that's coming up, that there was still momentum here, and it kind of held us up off of the 50 mark. Well, the 50 mark, oh, I guess you can't see really well. Sorry. I forget that my face is in the way. We were down here. We finally crossed the midpoint, and then we stayed up in this range forever. Like, we've been up here for a very, very long time. Well, how do you know when the move is done? When you start dropping below the halfway mark. The RSI on yesterday's close was 51.45. This was our lowest close during this entire thing, and I wouldn't exactly call the first one as counting. So we have a definite shift in momentum that's may or may not be visible in the price action. I can see it on the price action. You can also see it closing below the 20. Also finding resistance on the 20. Our 9's coming down hard. There's a lot happening on Bitcoin to say that we're exhausted. But we are about to, in 8 minutes, we are about to print a sub 50 RSI. 47.79 is the number I'm showing currently. So the kind of do or die number is 45. If you go below 45, that's generally my mental cue that we're definitely entering a significant pullback. So yesterday at this move, I had a kind of an emergency meeting with the pros, and we talked through this whole thing. And I ended up hedging my Bitcoin position, and it was the perfect thing to do, I think. Right now, we are pulling back. And so I've locked in my profits, and I'm going to let this run. The potential moves are 50, the 200, and worst case, maybe the 100. If we wick, just to confirm the breakout of the head and shoulders on the inverse head and shoulders on the weekly, it'll be around 24,200. So there is some downside coming. I don't know how significant. Historically, we've seen some pretty good downside though, because when we're in the year of the chop, we seem to always enter a period where we struggle. So last time it was intense because we moved up a ton. And then we just bled for 9 months. I can't tell you how painful this was. It was very, very painful to watch this. The market moved down a lot. And so I don't think we're doing this. But after we got off the bottom, there was another 70% move that happened. This was obviously COVID crash, and this was this is probably as black swan as you can get. But that was pretty wild, you know? So we definitely moved back pretty hard. We're not up 3x, so I don't think the move down is going to be that intense. We are still being very methodical on our way. But just because we get out of the bear market doesn't mean there's no trouble ahead. And then if I take another example of the other time we did this, I always use this chart and then it's got this wacky thing that happened during that year. Okay, this is what happened on the price. We have our selling climax. This was just kind of a pure reactionary thing. It's probably more like this seems a little more like what we're doing. We had a pretty good move. It's not perfect. Obviously, there's some serious changes, but we eventually got into a green zone. And the first green zone is exactly what we've just experienced. So we had our first green zone. It was a lot longer lived than this, but our selling climax was way down here at 162. And our first sort of base that we ever established was around 217. Well, after we got into the green zone, we left the green zone to yellow, which is kind of it's a pretty significant change in events, especially on the daily, that there's probably some downside coming. And so if we lose the 20 and then we lose the 50, we're probably heading down. In this case, we ended up hitting a foundation that was lower than our original base. So we had a pretty significant pullback. It wasn't all the way to the bottom of our thing. So we have a different structure this year. That's why there's so much nuance to this. You can't just point to the past and be like, we're probably going to do this because this is what we did last time. There's all these little pieces. But what is consistent is that there is some kind of pullback. And it's usually a little more than people are expecting. And so I've been very excited about our move, but I've been very cautious about what happens in the year of the chop where we're kind of heading sideways. When we finally really got off the ground, we still had some wild moves. Big move down here. Here's a new high. Things were great. You know, this actually is fairly decent. We had a wild move below the 20, back above. And then when we lost it, we had a negative 16% day. And then this ended up being the last big move before we started really getting on our way. But yeah, even these were crazy. And I knew people that were bailing. They were jumping ship right in here. They thought, holy cow, we've really moved up. I'm out of here. And they missed the rest of the run. They bailed at 2,000 or 3,000, and they missed the run to 20. So I'm hedging in kind of a unique way. I'm definitely putting a hedge in, but I'm not closing longs because I want the long exposure. If I make a mistake, I'd rather screw up a short and not quite get the full short that I want, but leave the long as long as possible. So anyway, Pro Channel knows what I'm doing. But anyway, it's very, very fascinating, and we're definitely doing it is definitely a different time. We've had a solid green zone, and at some point we're going to exit the green zone, because even in bull markets we exit green zones unless we're getting way too unhealthy and things are moving too fast. But this is actually pretty methodical, and if we flipped to support on the top of this 25,000 area, it'd be pretty rocking. Like that would be amazing, and we could really set ourselves up for another move. Let's see. There also is a case where we have one more push, because even if we pull back and find support here, there's probably, there's a case that we could really get up high to 30 or 40,000. A lot of these moves land in threes, so we have like a 1, a 1 and a pullback, a 2, and whatever pullback we end up with, and then a 3. So this could really take us. This could take us pretty high. I was expecting potentially that we'd get too hot and we'd reject off the 100. I don't think that's in the books right now. Yeah, I just don't see it right at the current shape of the chart. But that's actually probably a good thing, because if we can kind of consolidate before we get too crazy and find some support in a good area and then come up again, we could even, it'll allow us to even go higher, you know? So anyway, market closes in 58 seconds. So we are pretty much there. We are definitely falling out. Ethereum has been unbelievable. I can't even believe that we had a green candle today. So this green candle, when Bitcoin is down 2%, shows you how much strength is in Ethereum. And I kind of feel like we're going to get a bounce. Ethereum had a flip from resistance here to support here. It's just that this is a little wacky looking. And because of this, I kind of feel like Ethereum's either going to consolidate sideways or it's going to probably return down a bit. Where I would expect Ethereum to kind of grab some footing is either on the 50, or since we built so much good structure, it may not fall very far, like 18, and worst case maybe 17. Like this is probably all we'll get out of this. But if Bitcoin does drop, Ethereum's probably going to drop too. But it's amazing how well Ethereum held up today when Bitcoin lost 2%. Now, yesterday it wasn't so pretty. We lost 8% yesterday and Bitcoin lost 5%. So Ethereum definitely gave it up yesterday, and this is really an ugly candle. It's hard to say, after a move like this, what's left on the table, but I think we're going to get some kind of a bull trap, and then we're probably going to have whatever bottom we end up finding. So, and I think it'll probably happen on Bitcoin and Ethereum, but we just closed this. So we are below this line. No question about it. We did reject off of the 20, so that is huge. If we have a dead cat bounce and a bull trap, we'll probably come up and reject off the 20 again. And then if we lose this here, we're going to be in for some downside. So be aware. It doesn't mean sell everything. It just means be emotionally ready for this. You know what I mean? You do what you want to do with your own portfolio, but if you're in a place where you're like, I don't care, I'm just going to ride this thing because I know in a year and a half it's going to be worth a lot more, then ride it. There's no point in taking pointless risks. But I do see some downside here. I do. As much as it pains me. I'm just kidding. So that is definitely happening. Just one quick look. We're definitely ranging in our Bitcoin dominance. Our Bitcoin dominance dropped pretty good today because Ethereum way outpaced Bitcoin. So that was a huge move. Our others dominance is pulling back. Others are not, the micro caps are just not performing yet. And we kind of had a little bit of that discussion on the Pro channel because the alts just have not had their day in the sun yet. They have not, everything else has outperformed these. They're definitely, at a pretty significant local bottom here. But when they get off, that's why I like to have that little bit of exposure. It'll come around, but they definitely got killed for the past few days. A lot of the coins that had really good structure just fell apart. So they're just thinner markets. That's why I put such a small percentage of my portfolio in these when I'm messing around with them, because they're way more volatile. I have huge positions in Ethereum and Bitcoin because they're more stable. They're a little more methodical. There's a lot more to read. The trends actually hold. And then the alts are just chickens with their heads cut off, and you're just herding cats. So it's a pretty loose strategy for all of those. All right, you guys, I've definitely gone on for a little too long, so I'll wrap it up. But I'm loving the price action. It's very fascinating. It's very interesting. Just giving you the heads up that I can see, here. The fundamentals of Ethereum are unbelievable. It is incredible that we've got 750,000 Ethereum deposited. The fundamentals here are phenomenal. It is going to be a killer investment when we when we get there. So, all right, you guys, I'm gonna let you go. Have an awesome one. We will catch you on the next one. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.